What's up, everyone? We're going to take a look at Draftkings. So again, yet another day, pretty much flat on the day, 36 cents higher, 2%. Not too much of a change, anything worth, any sort of significance. I feel like, all of these small caps and these high growth stocks, it's the same story each and every single day. Long-term investors, continue to stay patient, continue to kind of average down when you can, kind of pick your spots. Now, obviously, you don't want to add on every flat day or every red day, but any significant drop into a level of support, you're going to want to add a little bit to kind of get that dollar cost average down a little bit. But nothing much to really report on DraftKings. As sad as it is, I believe in the company. I believe that it's going to be a great stock. It's not the right time right now to have these kind of stocks or be playing these kind of stocks. This is not 2020 anymore. Hell, it's not even 2021. With that being said, the level that we lost today, we did re-lose the 5-day moving average on Friday, and we just closed below the Bollinger Band, middle Bollinger Band today as well. So, like I said, pretty much flat. We never lost Friday's lows. Here's something to kind of keep in mind going forward. We're still trapped below the 5 and 10-day moving average. Realistically, you need to get over a price of $13.80. That will really be able to have room to stretch into 15. But again, that 50-day moving average has been such a stranglehold on the stock, for quite some time, months and months and months. I don't really think that a lot of these small caps get going until they can reclaim their 50-day moving averages. So, with that being said, what we are seeing is not so much of a decline anymore as so much of a just, going sideways action. Versus, like, if we just kind of zoom out a little bit on this chart and we kind of take a look to, let's just go back all the way to, like, October, November. We can see that the decline was pretty steep and pretty steady. Realistically, the last couple of months we're just kind of flattening out here. What this is telling me, move could be getting ready for some type of reversal. That does not mean that it's going to happen today or tomorrow or next week. But the longer we accumulate here without putting in new constant lows each and every single week is always a good thing. Definitely below $9.77 would be another leg down. That's not what we are going to want to see. 9.25 being the absolute kind of threshold there. Anything below 9.25, the selling pressure will just continue. As long as we can stay over these most recent lows here and this 9.25 price target, I'm okay with that. Whether it takes a month or 2 months or 6 months, if we can just continue to go sideways, the chances of us coming out of this, if you're averaged into this price, is going to be a lot better. Last thing I would do would be to sell out of my position. So especially if you're a longer term holder, you don't want to just get fed up and sell out of your position to then later 8 to 12 months be trading back at $30 or $35 or something. But the main level to kind of keep your eyes on, again, nothing is really going on in the stock. All of this 1% down day, 2% up day, 5% up, 5% down means nothing. Uh, you know, we can't really talk about the bullish side until we get over 15. Okay. We can't really talk about, significant selling pressure until we lose 925. As long as we're in between 925 and $15, that's the kind of range that we're playing with here. We're going to go to the top of the range, come back down to the middle, go down to the bottom, go back to the middle, so forth and so forth. Those are the levels that we need to keep our eyes on. Just set an alert, kind of be patient. Set an alert for $15. Over $15 got room to 18 and then 19. And then obviously anything over 19 to 23, 26, and 30. Those would be the levels that we would be looking at. But again, this is not something that's going to happen overnight. It's going to take some time. Main thing I want to see hold is we can't let this, we can't watch this continue to go below $9. If this goes below $9, then that's just going to tell you the overall market as a whole is not ready to come out of this bear market, and we could see some more significant selling pressure. So just be careful where you add on. I definitely wouldn't add until we get back down to this $9 area and then rebound to maybe reclaim the 10. Between 9 and 10.50, I think would be a good loading zone. Here, unless your average is super high, like 30, 40, 28, I wouldn't think about averaging down here. But if your average is something like 15, 13, 10, 16, 17, you don't really need to add right here in this zone. I'd wait for it to get a little bit lower and then kind of just wait for it to reclaim this 50-day moving average whenever that happens. I hope you guys enjoyed this video. Again, not much to really report on a lot of these small caps. They all pretty much look the same, but thought I would just jump on here and kind of, give a little blueprint of where we stand as of today, and today being the 6th of June. With that being said, make sure to like, comment, and subscribe, and I'll see you guys all in the next one.